What's up, guys? Snowflake just reported earnings. They crushed it. The stock's up 16% after hours. Now, if you watch the channel, I just did a top 5 cloud stocks, top 20 even. Snowflake was number 1. And I got a lot of heat for that. I got a lot of people saying, hey, why did you switch it from CrowdStrike to Snowflake? And the simple answer is really the total addressable market, just the opportunity for this company. I'm going to go through some of the highlights here for second quarter fiscal 2023. That was a beat on top and bottom. We also had increased guidance, so the guidance is very strong for next quarter. And if you look at some of the numbers, you've seen some of these slides here before talking about the data cloud. If you want more information about Snowflake at the end of this video, this is gonna be a short video at the end, you can take a look at my top 5 cloud stocks videos here on YouTube, and you can get a deeper dive of Snowflake. It's about 10 minutes of that video that talks about Snowflake and the platform. There's an entire playlist on the channel that covers Snowflake as well. So some of the highlights, guys, we had 83% year-over-year revenue growth. That's really solid. 171% net revenue retention. So that revenue retention is essentially keeping your customer and expanding that customer footprint, having your customers spend more money with you. So of course, that's a really strong number. It's the highest you're gonna see if you start looking at cloud. It doesn't really get much higher than that. And of course, this is not true SaaS. This is a consumption model, data warehousing as a service. Strong large customer momentum, 246 customers with $1 million of product revenue or higher. And their gross margin is actually 75% non-GAAP product gross margin. This is a slide we haven't seen before, our consumption model. I think this is really good. So it tells you how Snowflake recognizes the majority of the revenue. So you look at Pro, enables faster growth, align with customer value, and so on. Consumption on the pricing model, the Pro, customers don't have to pay for shelfware. If they're not using it, they don't have to pay for it. Consider performance improvements, inherently reduce customer costs. And then the billing terms are typically up front. Snowflake typically bills customers annually in advance for their capacity contracts. So that's interesting, right? Some customers consume on demand and are billed in arrears. So they've got a very interesting model here. Talks about the bookings and so on. The payment terms are evolving. They focus on revenue and RPO, so product revenue, remaining performance obligations, and billings. So this is kind of complex, but they basically book the deal. It goes into billing. And then you've got the consume model. And we could go down a rabbit hole and spend lots of time in this. I just want to do a quick overview here. So here's a strong combination of scale and growth. We got annual revenue in millions, 106% year-over-year growth from FY21 to FY22. It's really solid. Quarterly revenue in millions, you can see this is ramping up, of course. 272 to 497, that's 83% year-over-year growth. Customer commitments also growing. The scale is just amazing with these guys. Large customer momentum. You can see the growth. Total customers, 36% year-over-year. Customers over $1 million in product revenue. It's funny, we had somebody actually say, hey, why do you make this video when the stock is still expensive? If you actually would have bought Snowflake last week, you're up 20%. And the thing about this channel, guys, I'm never telling you when to buy a stock. I'm not pumping stocks. I'm giving you information. You make the decision if you think it's a buy or not. I'm thinking long term. About 4 or 5% of my portfolio is in Snowflake, and I've got a 20-30 time horizon. You can see the net-based retention rate, 169%. And it's staying in that 170% range. It dipped slightly from last quarter. You did notice here, 174 to 171%. Improving product gross margin. We've talked about this before. So cloud agreement pricing, this is your expansion drivers, scale, product improvements, enterprise customer success. Operating leverage while investing in growth. Some really solid numbers here, some great infographics. Focus on free cash flow generation. Of course, that's really important, especially in this type of environment. We don't want to be burning cash. They're hiring like crazy. You can see S&M, they got R&D, cost of revenue. Employee headcount's growing. They're growing their sales teams, their engineering teams, everything to try to address the scale and the scope and the opportunity in front of them. Also expanding internationally, you can see that continuing to grow. Data cloud metrics, data sharing 21%. Powered by Snowflake, 590 registrants, marketplace listings, 1,539. And of course, the advertising segment I think will be huge for these guys as that continues to roll out. So this one's pretty cool. Product revenue, 466 million. Again, that's 83% year-over-year growth. And that revenue growth, 171% net-based retention. The 1 million customers is growing. The one here that sticks out, 100% of customers recommend Snowflake for the 5th consecutive year. They've got that promoter score of a 72. Marketplace listings, I think this is going to be big for their future. Total listings up 13% sequentially quarter over quarter. And then Forbes Global 2000 customers, 15% growth year over year. They have 510 out of those 2,000. This was just a quick update on Snowflake, guys. I hope you liked it. This video is sponsored by the Motley Fool. If you want to see the 10 best stocks to buy now, visit fool.com/firedupwealth. Make sure you subscribe to this channel. Click that bell to get notifications. Hit the like button. Drop a comment. Have a great rest of your day. Take care.